Welcome to Trends with Friends with Invest with Rules. I'm Scott Bennett with Mike Olafson, and we have a really awesome special guest, Mark Bauer, who is a member, and he is going to discuss his process, his rules. I think it's going to be really informational, helpful to develop rules and to customize them to your personal preference.
It is my pleasure to introduce over the next several minutes. We'll have some good discussion with a longtime member, a longtime friend of mine, a paid member, by the way. So he's right there with y'all, and he's just an overall great guy. At least I hope you think so afterwards, right, Mark? Uh, But no,
That's nice
seriously,
of you to
great,
say,
great,
Mike.
great guy, and really looking forward to the discussion. Mark, thank you for joining us. And if you don't mind, first question for you, just talk a little bit about you and just tell us more about yourself if you could, please.
Yeah, just briefly, without being overly boring, I'm just a person who sold coffee for many, many years, right? That was my job. And I met Mike in that process. We both worked at Starbucks together for a long time, and he piqued my interest in what investments could be. And so we were fortunate with Starbucks that we had some pretty good stock option opportunities, and so we were watching that grow, and he really did a great job of introducing me to what the opportunity for stock trading could be. And like he did last week, he shared with me the Darvis book, and I read that, was fascinated by it, and said I want to get involved. At that point, Mike said, don't get involved with pretend money, use real money. So I opened up a Fidelity account, took $5,000 of my Starbucks stock and put it into this little account. And I started trading. And I'll remember my first trade ever was Ruger. I not because I am a fan of Ruger, I didn't even know what RGR was at the time. And, but it hit some sort of buy mechanism that I had and I bought it. I don't even know if it won or not. I don't. But at that point, I was following a person. His name was Darren Donnelly at a trading tool called Darvis Trader Pro, and it helped me identify what positions I wanted to buy, and ultimately that's the foundation of everything I've been looking for. I mean, there's thousands of stocks. The question wasn't, how do I do this right? The question is, how do I find the one that works? What stock should I buy? And then once I'm in that stock, when do I get out of that stock? So it's a question that everybody has. And Darvis was really good. The Darvis Trader Pro was really good. I was buying little pieces here and there, but I don't know what my success rate was. But then he kind of sold his business. And I floundered for a little bit looking for somebody to follow. Mike introduced me to IBD. And, I was with IBD for many years. I actually have my book here, my How to Make Money in Stocks, Bill O'Neill's book. And I became a chart pattern geek. I love the idea of chart patterns. It helped me really fine tune what I wanted to buy and where. And then I started watching IBD Live every morning, and just they have Mark Minervini on, or they have Charles Harris or John Najarian or any number of guests, and they all had different ideas. So I was just overwhelmed with ideas. And it was great, but it wasn't nothing really kind of broke me out of my kind of consolidation mode that I was in for many, many years. And quite frankly, not until Invest with Rules. And I want to be really careful because I told Mike and Scott this. I don't want to damn them with faint praise. I have loved trading, but it wasn't until the IWR process that it really helped me understand a good opportunity for buy-in. So what the Billion Dollar Fund Manager does for me is it really gives me this idea of thousands of stocks. Let's shrink them down to the top 50 to 100. And then I can do chart study on those. And quite frankly, when I first started working with you guys, I was buying as soon as something hit gas. And now what I'm doing is when something hits gas, I will do a chart study on it. So I'll look for patterns, and when it has a particular pattern that works, I'm in. And then I follow the 8% rule, and I work to get to road tripper. So the ability to follow rules and identify patterns has been a real game changer for me for the last 3 years, and I'm super grateful for it. And I'm grateful for the opportunity to talk about it. So that was a long history. So I apologize for going that far, but I just want to say I'm not a trader professionally. I just love doing this, and this has helped me out a lot.
Awesome lead in, Mark. So thank you for that. Let's dive in a little bit more because one of my questions is how is your process developed over the years that differs from us, and how do you use our research? It's you answered some of that over the last several minutes, but for example, you touched on a couple of things that I'd like you to dive a little bit deeper on. You said 8% roll. You said road tripper. And for newer members, maybe we could explain, that's a we used to use that last year. Maybe you could explain a little bit about what it means to you, if you don't mind.
Yeah, it means structure. There was a time where, and we've all experienced it, where we couldn't lose. No matter what we bought worked. And then there'd be times where no matter what we bought doesn't work. And so, I used to love to gamble on football games. I mean, I'd not a lot, but like $20 on a game, I just enjoyed the thrill of it. But it's boring to me now. The idea of it's boring. The sports gambling is boring because there's this opportunity here to move the edge slightly in your favor, the house edge, even if it's just a couple percentage points. And that's what this has done. So I'm not betting $20. I'm investing thousands of dollars into a particular position. And I'm giving myself the best edge I possibly can give myself. But there's very specific rules to doing that. When I was trusting my gut, so to speak, I would fail miserably. And the failure would be I'd lose sleep over it. Like I would be up at night thinking, why am I still in this position? I had oh, Mike, what was it? It was Nano, or I can't remember the stock, but I was up like 30%. This thing climbed like crazy, and I was a genius. I thought I got in this thing early. I don't have no idea how I found it. Got into it early. It took off. By the time I got out, I was down like 50%. I lost 50% of my initial position because I was terrified of getting out. I knew it was going to recover. It was so successful for me. And maybe the PTSD got it out of my head and I forgot the specific ticker, but it was brutal. And I thought I was smart at the time. That was like 6, 7 years into my journey. It's amazing how no matter how smart I feel, I make really dumb mistakes. And I don't beat myself up for those mistakes anymore. I let myself realize, okay, I'm learning from them and keep moving on. I don't think I'm really answering your question, but I'll stop. I'm sorry, Mike.
Yeah, yeah, if you don't, no, you are answering, but you just extend it a little bit and talk about, all right, so you talked about losing sleep before. What is it? How have you transitioned, and what are you doing now that, what's your process that helps you to sleep sound at night and basically not worry nearly as much as you used to?
Yeah, it's simply just it sounds so trite, but I'm just following the rules. I have a structure. I have a structure that I follow that like Tesla, I have a big position in Tesla. And now I've been in Tesla for a long time, so I have it's to use the old term, it's a road tripper stock. It's a stock that I have a big cushion on. So I'm outside of that 8% rule now. I'm in like uh I won't lose more than 65% of my profits on that investment. Okay. So now we've got Tesla earnings yesterday. 4 years ago, I would be like, please be good, please be good. I need this to grow, right? And now it's like whatever it does, it does. I just simply react to what the program is, and that's not because that was a long road to get there. There's a lot of sleepless nights to get to this place, but I finally feel like I'm at a place where I can just accept what the market's doing. I'm not so much worried about how oil prices and what's happening in the Strait of Hormuz is going to impact my portfolio as much as whatever happens, I am ready to make a change if I need to make a change, or am I ready to make an investment if I need to make an investment? I have a dear friend who I got involved in IWR, and as soon as the war started, he immediately bought oil. He bought oil K, and he did really well with it, but it didn't. I looked into it. It didn't match my pattern rules, and so I didn't buy it. And he had a really nice run on that, and I missed it. But I really wasn't. I didn't miss it. It just didn't hit my buy point, and I'm okay with all of it. My FOMO is almost completely gone. Almost completely gone.
So let's dive into a few things. So you brought up the 8% a couple of times here. So if I'm hearing you correctly, you put on a position, you're using a straight up 8% for your risk unit, your trailing stop. Is that correct?
That's my, it immediately starts at 8%. And as the position, if the position moves up, then it's a trailing 8% stop. But I will do my best not to lose more than 8%. And to be clear, you guys put a position or a process change in place last year where instead of trading in the afternoon, you trade in the morning. I love that. I inherited or I adapted that to my trading style. And so it really doesn't helps me with recognizing, okay, if I have a position, like I was in Maple Bear, CART last week, and it did really well. It had a drop down and it hit my stop at like 3 o'clock in the afternoon. I'm gonna wait. I'm gonna wait till tomorrow morning before I make that trade to see if that first 30 minutes of the day has any change. Well, what happened? It went down even further. So I ended up losing more of a percentage on Maple Bear. I ended up getting out at -2 instead of +4, where I would have gotten out the day before. But that's the process, right? And I'm completely comfortable with it. On average this year, or not average, my losses are at 7.7% this year. That's what my average percentage loss is.
Okay, so let's be really clear with that because that's a super key stat. So first of all, you track your stats closely, clearly. But in other words, if you were to average all your losses and dollar amount versus percent invested, you're at what, 7.7%?
My losses are 7.7%. My batting average this year is 408. So roughly 40% of my positions buys win. My losses are on average, those losses average about 7.7%. Or not about, that's what the average is, 7.7%. But my wins are pretty significant. And it's a little inflated because I got in Micron really early. And so that really inflates my win percentage. But typically it's like 24. If take Micron out of the play, it's probably 24% on my wins, 7.5% on my losses, and I bat about 400.
Okay, excellent. Thanks for sharing that. And we've talked about stats several times on these videos. And just a quick little kind of side note to really emphasize, here's another example of a successful trader using a clear process that has got foundation in IWR, and I want to talk more about that in a minute. But the key is you're losing more trades than you're winning, but you're still profitable because of that dynamic of when you lose small. When you win big, right?
You're looking for those runners.
Yeah.
Absolutely right. You get 3 or 4 really good runs a year, you're in great shape. You get 1 micron a year. Geez, you get 1 micron every 2 years, you're in great shape. And I've been blessed with a little bit of good fortune there.
Yep. So let's tie into that. So the big winners, you said you've been in Tesla for a while, Micron. So talk about, you mentioned road trippers a couple of times. As a quick side note, road tripper was a concept back when we were in the trend roadmap splitting up trades. We would let, say, half a position run on the long-term trend and would call it a road tripper and try to cap our kind of give it a lot more leeway to run. A lot of reasons why we switched from that, simplicity, performance, etc. But if you could, Mark, talk a little bit more about that. How do you use that concept? We don't have to call it road tripper, just how do you let winning positions run?
Yeah, if I use the methodology that I learned from your systems, the IWR system, which is if I can get to 3 times risk, so that's 24%, then I scrap the 8% loss process, and I simply say I will lose no more than 65% of my profit on this position. So that might, in some cases, take me from an 8% trailing stop to all the way to like a 20% trailing stop, right? And so it will vary based on how well the position does, but it absolutely allows me to give that position a much longer run and a much wider gap to run, which I'm comfortable with. And I think that's ultimately where it is. The the fact that I've become comfortable with a certain process is what allows me to absorb the losses, and it's when I first started and even a few years into it, I would sweat every loss. And that's what happened when I was gambling on football. That's not healthy. You've got to accept. If I think about it from a football analogy, gambling on football, and I'm sorry I'm taking down this path. It's probably not where you want to go with it, but if I was batting 400 and gambling on football, I would be losing a lot of money to DraftKings, right? That's a lose. You have to be at 55% or 60% sometimes gambling on professional sports to make any money, right? And then now you're $10 and $20 bets. It's just silly. You're just donating money. This is a different story. I'm at 400 and I'm making money.
Yeah, this is the second week in a row where gambling has come up in regards to the world of investing, and we want to be very clear. This is what we're talking about is not gambling.
Exactly right. It has moved me from being a gambler to being a sophisticated, or that's maybe a little bit more generous than I should be, but it moved me to a smart analytical thinker who mitigates risk. And that's not gambling. That's proper trend investing,
Yeah.
I think. And that's being overly complimentary of myself, but that's kind of how I look at it.
Okay, so if we could, Mark, let's extend this a little. I want to ask you. We're going to actually get in, look at a couple of charts and trading view, but before we do that, let's talk a little bit more about. You've laid out your process or the basics of your process, and if I'm a member, especially a newer member, sitting out there, I'm saying, wait a second, he's not following all of what Scott and Mike put out every day. What's going on here? If you could talk a little bit more about that evolution and then specifically about what's the foundation of what you are using with Invest with Rules? What is it that still supports your process?
Well, I would say it's like 80%. Following the invest with rules process. When I first was introduced to it, I saw Scott on IBD Live. He was a guest on IBD Live, and I loved how his idea of the $1 billion fund management and where he came from with Fidelity and how that all played into identifying the right positions to buy. So I was really intrigued on the buy side. But after watching the videos and after really getting involved in using the practice, it was probably equally, if not more so, helpful on the sell side in terms of when to sell and when to hold. So the whole idea of gas, coast, break was visually made a lot of sense to me, right? So what for me, being super obsessive compulsive and really analytic, I am I need to understand how the process works. And what IWR uses is an algorithm that I don't fully understand. I trust it, but I don't know how it works. That's where pattern investing comes to play for me. I can see exactly where I want to buy. And oftentimes we buy around the same time, right? So we identify similar positions, we buy around the same time in those positions. And so it's pretty close, but there's probably maybe 25% of my positions that I have that you guys don't have. And there's probably that same number of positions that you have that I don't, because it just doesn't hit a buy point. And so I trust the chart pattern because that's how I taught myself through the IBD process how to identify buys. And so I think that's probably the big difference between us is that I follow chart patterns and you guys have an algorithm. And I think they're pretty similar.
Are you buying on a coast or a break, or are you buying on gas? Is everything
Yeah,
that you look at gas?
absolutely. So my watch list, the way I manage a watch list is every day I look at your billion-dollar fund data, and I look for anything that moved to a gas, not from overheat to gas, but from U-turn or brake or coast to a gas. I identify those, and sometimes it's zero, sometimes it's two or three, sometimes like on a big day, it might be like 15 positions. So I take those positions and then I do a chart analysis on each one of those positions. So one night that might be 0 minutes. One night it might take me 5 minutes, and one night it might take me, I don't know, half an hour to analyze each one of these, depending on how many of those changed. And then I keep a chart. If and so my watch list might have 30 positions on it at some point, but as soon as that, and for every position I identify if it has a pattern, I'll identify a buy point, and I could be 2% away from that buy point. I might be 15% away from that buy point, but I have a buy point. Every
Yep.
night I repopulate it, and as soon as that position goes to coast, it comes off my watch list. It has to be on a gas, and it needs to be an uptrend, long term, uptrend, short term. So it needs to be above the 120 and the 240 lines, and
Okay.
the 21-day line. I'm sorry, yeah, needs to be above those lines for me.
Okay. So I'll tell you what, let's transition to charts, but before we do, general question for you is any suggestions for newer members? Anything that you could share with a newer member from the Mark Bauer School of Hard Knocks that might help them?
The best advice I can give, and I have a friend that I've brought into the IWR family, is that I've shared this with him. Give yourself some grace, because you're going to make mistakes, and some of those mistakes are massive, and relatively speaking, massive, right? And it's okay. It's part of the process. You are essentially, every lost trade is essentially you paying for an education. And Scott would always talk about, hey, it's $600 or $700, whatever. I can't remember what the entry fee is every year. He's like, the hope is that you can recoup that money. I have recouped that money on so many different trades. There's so much upside to this strategy. It's just be patient and give yourself grace, especially when you're brand new. Because when I was brand new, when I bought my RGR 15 years ago, I wanted to buy immediately. As soon as I had that $5,000 in my account, I wanted to buy something right away. As soon as I got into IWR, I was like, let me buy something, hit gas, please, so I can buy. And it's just normal. It's just how I am. I'm just super eager to want to do this, and it's probably not all that different from some of the folks on the call. But yeah, give yourself some grace, allow for mistakes, and allow yourself to find your own process. It's going to take months, and it's so worth the ride. Enjoy the ride, right? Enjoy the journey, because it's all about learning and getting comfortable with it, and then you find yourself being able to sleep at night and not sweating a week like these last couple of weeks.
Oh, and you just reminded me. I said last question before going to the charts, but yeah, you just touched on something. What, generally speaking, how do you position size?
I follow your 5% mechanism. So it's basically 20 positions. If I have let's say I have $100,000 portfolio, my 20 positions would be what? But it's $5,000
Okay.
a buy, right? Yeah, that's how it would work.
Gotcha. Okay, cool. And so if you do rough math, you take your 5% positions, you take an 8% initial stop loss. It sounds like you keep it simple, 8%. Yet then your risk per trade is less than 1%. It's well less. It's less than a half a percent. So your
Yeah,
risk per trade. Yeah.
yeah.
Okay,
Um,
great.
the other thing that I just quickly shared, there is a challenge between a taxable account and a non-taxable account.
Yep.
I have found, I've recently retired. This has allowed me to retire and do some really fun things with this. I spent about an hour or so a day on my stock planning journey in the morning, and then another half an hour in the evening, and it's all great. A great process. I love it. It's something I really enjoy doing. But when I transitioned my 401k to my IRA, it is so much easier following the rules in an IRA, because I'm not sitting on a massive micron capital gain that I have to try to maneuver around before. So as Micron's dropping down, it's getting close to my stop. If I stop now, I'm going to get hit with a short-term capital gain on Micron that I don't want to pay. That's a that's a good problem to have ultimately, but it's so much easier to trade, I'm finding, in an IRA than it was in my active account, which I've been trading for many years.
Yeah. You know, that's a great segue, and maybe we'll have you back on in a couple of months and talk about how to manage in a taxable account those long-term leaders that you have and
Yeah.
best practices. So that's a good topic. All right, excellent. So I tell you what, Scott, if you don't mind, let's get TradingView cranking, the TradingView engine
Yeah,
started.
and Mark, thank you. That was really awesome. So I really enjoyed that. Thanks for sharing your process. And just to summarize, here is the $1 billion fund manager rank page this morning. And what Mark is doing is which you could go file, download, but in reality, it's gas signal. It's a new gas signal. So whether it's Corteva or Biogen or Baker Hughes or Marriott or Delta, that would hit the go check it out list. And that seems we love that you've taken the process and you have your risk management, and not every trade's going to work. And I know it's emotional because when you're in an environment like this, it's like, oh gosh, this not a lot of stuff's working perfectly. But that's super interesting. So I'll move over to the charts. I have a list from the queue, but where do you want to start, Mike?
Yeah, let's go ahead. And Mark, I think you had five that were just interesting to you as far as past trades. CrowdStrike, first one.
Yeah, so CrowdStrike was one that I got in really early. And if you can see, if you look back down at like April there, you had a little cup and handle that started to form, and you've got a couple double tops there. And so I I got in when it hit that gas point there after it hit, it was exceeding the double top, and I probably was a little more aggressive than I typically would be, but I liked how that broke out and it hit a gas, and on the second day of the gas is when I'm sorry, the fourth day of the gas is when I bought. So when it jumped up that fourth day. And and so, that was a I've had some good success with crowd this year, just again following a basic chart pattern piece. But there's three ways. Let me just explain my three. So crowd was one that it showed up as a gas, but it showed up as a chart pattern before it showed up on IWR. So I have the $1 billion fund managers show up as Scott just laid out. But then I also have anything that you guys purchase, right? As soon as you guys buy something that isn't might not be on mine, I am involved with, right? So I think we used, what would we use there? Apple was one. Oh, I'm sorry. Here's one. How about Monolithic,
Yep.
MPWR? So Monolithic had a hit a green, hit back in March, and it kind of struggled and it dropped down to coast again, and then it came back up to gas, and it just didn't. It gapped up too much too fast for the cup of the handle to form. And I'm a big handle guy because of my Bill O'Neill stuff, and so I just didn't buy it. You guys did, right? So there was one that I missed a good 20% run on because it didn't form a pattern for me. And again, I'm okay with that. But it was a nice win for you that I didn't take advantage of,
But
and
yeah, but there's the key. You're okay with that because you followed your rules.
exactly right. Yep,
Yeah. Yeah.
exactly right. Um, and then the third way I buy is what I call my gut. And I use that term tongue in cheek. I have a friend, my friend who I brought into this, he's learning, and he had a really great first year, like remarkable. Everything he touched won. And now he's struggling a little bit. And he will send me a text, and he calls it IWR confessionals, where he bought something outside of the rules that we've established, and he just gets really excited about something, and then it crashes on him, right? And so he's having a tough go of it because he's trusting his gut way too much. So I tongue-in-cheek teasingly call this my gut plays, because it's not $1 billion fund and it's not IWR. But Kathy Donnelly was on last month and she talked about CoreWeave. And so I'm really intrigued with business in general, and this is how we don't gamble. We turn it into just being smart about when we jump in, but there's nothing here. There is nothing here on CoreWeave that is pattern oriented for me. It's all in a break right now. The closest we can get is that trend line and maybe a uh, uh, that what is that the triangle pattern starting to form there, but we're probably 30+% away from that being a potential buy. It's on my watch list. It's on my watch list as a gut, but I will not buy this unless it turns green. I trust Kathy. I liked what she showed here, so I want to put this on here and I'll be watching this. I may be watching this for months, but it's something that I'll keep tracking.
And I think you're spot on when you say you're kind of using gut tongue in cheek because there's a rationale as to why this is on your watch list. And it's an IPO and it's following certain characteristics of a successful IPO, as Kathy laid out. By the way, anybody who hasn't seen that episode, it was back in June. You could see it go in the portal and watch that episode. Great episode. But yeah, so it's really got tongue in cheek.
Well,
Yeah.
I'll add one thing. Just so it was SpaceX IPO day, which we can look at a chart, but she has a concept in her book, The Life Cycle Trade, which is if an IPO goes up 100% in 90 days or there's a strong, and this one went up 258% from at least the base breakout. But you could say, okay, well, that she considers that a rare jewel, which means there's a 50% chance it could go up 500%. So then obviously this is where the IPO institutional due diligence phase is where we are. And then if we look at our friend SpaceX, we were discussing how even though it's tempting and you could have maybe made a little bit of money in the first 3 days, SpaceX has been absolutely tortured because half of IPOs lose half their value. So this is, I think one of our members, Jim, sent a picture of like a spaceship crashing. But this is a really, I totally get it where there's a couple of those stocks in the universe that have IPO'd well that to have on your radar on your watch list.
Yeah,
And I
excellent.
love SpaceX. I love the idea of it. I love what they're doing, and I love what's happening to the stock because it's giving us all an opportunity to get in. This is not a short-term play, it's a long-term play, and but to your point, Scott, it's doing exactly what Kathy talked about. It's that classic lifespan of the IPO. And yeah, it's pretty cool.
Well, but to be clear though, Mark, when you say giving everybody an opportunity to get in, just expand on that. Get in now or
No, no,
ah,
let this thing
okay.
keep doing
Okay.
what it's doing.
Yep, yep,
Let it form a pattern. It takes a long time for patterns to form,
yep.
and IPOs will take months for patterns to form. So I'd like to get in SpaceX. I'd love to get in SpaceX before the end of the year. But the worst thing for me from a SpaceX perspective, and I love what Elon's doing. I love what SpaceX stands for. But if this thing took off tomorrow, that'd be killer for me because it's not forming a pattern. And I'd miss the buy-in. So I'd like this to gradually work its way back up, form a pattern, hit a gas, and let me get in.
So am I safe in assuming, Mark, you do not buy down, you do not dollar cost average down?
No,
Yeah.
nope.
Okay. Gotcha. All right, cool. All right, I tell you what, anything else, Mark, you wanted to cover before we go on to other member tickers?
No, all good here. And yeah, I'm just other than to say I really am grateful to what Scott, you and Mike have done and what you've brought here. I am not, like Mike said, I'm not paid. I'm a member like you all, and I love the idea of the member community on this. And any way I can help, I want to help. I just enjoy this a great deal. So thank you both.
Yep. Excellent. Well, thank you, Mark. This has been fabulous. Hopefully, all the members watching, listening to this have got some good nuggets out of it. I think there's some definite lessons that we could recap maybe next week.
Thank you again, Mark and Mike, and everyone on the call. We'll see you next week for Trends with Friends. Take care. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.